people kind of forget that they got to source a product, that they have to fill the man hours. Like one thing that I've always said was under promise, over deliver. Because when you under promising and over delivering, that's going to put you in a position to be successful regardless, no matter what you do. But too many times people, they over promise and they under deliver because they're not tracking. They're trying to outpace the market when they didn't really have any competitors at that time.
What's good?
What's good with you, fam?
Oh man, we busy. What y'all got going on?
Well, it's out here. We get ready to, hit Africa here pretty soon. Boots on ground. So I'm making sure that, I'm getting my young buck, and my OG over here ready, to handle take the wheel, for a little while, at least until I get situated. Because I'm gonna go dark for a while, so that's gonna be interesting. What you got going on, Shawn?
For me, it's just another day of teaching. That's pretty much it.
Okay. Shaping the minds of the world. I feel it.
Man, so we got a pretty interesting topic here. What y'all think about Peloton?
Bruh. I mean, I think Peloton's in a good space as far as like right now in the internet age, like they can, market and rebrand and get bought out by somebody. But I also think that they oversold based off of COVID, So that's not COVID, the beer bug. I said it twice. Let's make sure. Hopefully, hey, this thing don't fly too hard. But yeah, after the beer bug, I think they did real successful in the beginning, right? Because people were trying to do it, but then they also kind of got shafted from a political standpoint because like somebody made it all about like there was that little thing about fat shaming and stuff like that, and we don't want to go down that route, so that's hard. And I don't think they did that intentionally. I think they were just trying to reach a target audience that was sitting at home. So
yeah, I think they definitely chose the perfect time to like take off. Like when everybody was at home and it was tough to get exercise equipment from other places online. Like them like bikes, they came in handy. I got a coworker who lost a lot of weight and she's very happy with the product. She's like, yo, I love Peloton. She has like Peloton shirts that she wear on Friday and everything. She loves it. So I mean, I don't know a ton of people with Pelotons, but like she loves Peloton so much, it has to be a great product, right? It's just unfortunate, like they stock took a tumble, right? So let's get into that.
Yeah, I just want to. Y'all got some interesting points. I'm just gonna say this one thing, and then we're gonna dive into the article. I think the problem with Peloton is that I think management is an issue with Peloton, and then I think that due to inflation and the reopening impact is definitely what's caused Peloton to take caused them to take a steep decline in terms of stock price. But I do think there may be the grass may be green on the other side for Peloton. But we're gonna dive into it. I'm gonna pull up an article from the Wall Street Journal that I want to talk about. Let's go here. All right, let's get into it. So we got an article right here that talks about, Peloton warns staff of layoffs and changes to production. And so I just want to dive into this article real quick because I think that there's some valuable lessons in Peloton's stock decline in terms of how to go about investing and what investors need to actually take into account when they're looking at companies, because a lot of the times we're actually looking to invest in companies from a long-term perspective, because we see that's where the greatest gains come from. Compounded interest, investing in companies for 10 plus years or so. Solid companies though, but we're gonna dive into it. So I want to talk about this here, where CNBC reported that the company would pause bike production in February and March and pause production of its Bike Plus until June, citing internal documents. Peloton won't manufacture its treadmill machine for 6 weeks, beginning next month. So that's one of the things that I want to kind of talk about with Peloton was that, you know, you see this supply chain issue here with Peloton. We saw that early on in the pandemic. You know, they may have estimated demand, and I think that has definitely come back to haunt Peloton. What do y'all think? Y'all got anything on that?
You know, yeah, that's you said they. Hold on, I'm looking at it. You said they might have underestimated.
Mm-hmm. Yeah, I think they may have.
I think. Okay. My internet connection is fading out a little bit, in and out, so it's kind of hard for me to catch it. Yeah, I think you know, when it comes down to their strategy, like they have to actually reflect what the market is going to do. I just don't think they did enough research. I mean, that's really what I think it is. And with these big companies, like when things start popping and things go viral, the problem is Peloton did such a great job marketing on the marketing end that like everybody was like, it's gonna take off. So when the money comes flooding in, you got investors saying, take my money, because that's how it flows. People kind of forget that they got to source a product, that they have to fill the man hours. Like one thing that I've always said was under promise, over deliver. Because when you under promising and over delivering, that's gonna put you in a position to be successful regardless, no matter what you do. But too many times people they over promise and they under deliver because they're not tracking, they're trying to outpace the market when they didn't really have any competitors at that time. And I think the bikes, I mean, at the time, man, I was looking into how expensive the bikes was. Like that's not an investment that I'm willing to like keep out. Now, if it was just the software, right? Like, and I can put it on a bike at the gym, which I think they're gonna transition to one day, then that's a different story. What you saying, Shawn?
I'm just kind of putting everything together, like based off of the information that's right here. It said that they wanted to pause bike production in February and March, and I was looking at the charts on my phone to see what their stock was doing during that time, and it looked like their stocks fell back in 2020 during that time. So if they're pausing production, and I'm thinking about supply and demand, like maybe they're pausing production, even though it says right here Bike Plus, maybe they're trying to lower the number of bikes that they have, so that way they don't have to lower the amount of cost because of so many bikes being out there, right? But that's pretty much all I have about this one. But back in 2020, I was looking to see that Peloton stock went as low as $17. They IPO at 27 and then dropped 30% in like 3 months, right? And then between March to about January 1st, somewhere between January 1st and February 5th, they went as high as $171. So like maybe they was thinking about, back in 2020 we was doing really good, right? So maybe if we lower the production in bikes, we kind of chill out for a second, then maybe people will go back to buying our bikes again. But they're not thinking about how much the penny, I guess I use that penny, played a role in their ability to sell those bikes.
Okay. Break that down, what that word is real quick for our listeners.
I'm trying to
make sure.
Pan blank it.
Oh, you talking about the beer bug. Okay, got you.
Yeah.
Okay, the penny. Okay, I was like,
I was trying to figure out a way to say it.
I don't know. I think you talking about something else. Nah, it's all good. But yeah, man, it's weird though. It's a weird strategy, right? Because I'm like, why would you pull back? Like you already in now, but if they ain't got nobody to sell it to, and they don't become a technology company, they put themselves in a hole. So that's a tough one.
And I think that I was reading something that said that they have, they actually have so many bikes in warehouses that you know, nobody's willing to buy these bikes. You know, like you said, with
Oh,
the panty, you know, there was a lockdown situation going on, and a lot of people didn't have access to gyms. And so that's when, like you said, Peloton, Tommy hit it right on the head. A lot of analysts have came out and said that Peloton has probably one of the best marketing departments in the market. You know, there was some people on CNBC that was talking about that. So during the panty, you know, this company had a chance to thrive. You know, they was able to sell these bikes and, you know, get these bikes out. But ultimately, I think what they did, they probably overestimated on the numbers in terms of engagement being high. And what I mean by that is a lot of people still, you know, subscribe to Peloton and still being active on the training programs. I think they may have overestimated on their numbers, and they may have underestimated the reopening, you know, such as, you know, how, what will consumers do then? Consumers that, you know, have a Peloton bike, where would they be going and what decisions would they be making in terms of their health? So I think they may have, you know, overestimated there. So we're gonna
yeah.
keep going down. And so yeah, Peloton reported an adjusted loss before interest, taxes, basically EBITDA, between 260 million and 270 million, which was a smaller adjusted loss than expected. The company's share closed Thursday at 24.22. The shares are down more than 80% over the past 12 months and more than 70% over the past 3. The company's market value has tumbled from more than 50 billion to under 10 billion. And so I want to talk about this here too, because when I was doing some research, you know, I think Peloton all-time high was about 150. And so, you know, now it's tumbled back down to, I believe today is trading at $37. There's been kind of like a short squeeze. A lot of people have been running up the stock because there's been news about possible acquisitions, which we will talk about later. But what I wanted to say is, you know, with that, you know, having an exit strategy is very important. You know, I'm not saying that a lot of people should have got out at 150, because, you know, you can have some euphoria and you can get a little greedy. You know, you can say, well, I think based on assumption X, that this company is going to keep rising, you know. But it's very important that as an investor that you actually have an exit plan when you're investing in some of these companies. Because to be honest with you, what the news I was also reading was that the CEO and other people, they got out, they started selling. You know, they still been selling, but they were selling too at the all-time highs. You know, they was profiting money. And, you know, investors, you know, they got left out in the woods. You know, they got left holding the bag. You know, and now you're at a point where the stock is like, you know, trading almost below its IPO when it first went public. And a lot of people saying, I don't want to sell here. At least wanted to recover a little bit so I can make a little bit more profit. So that's very important that you actually have an exit plan when you're investing in these companies, because you have to take a look at the economic conditions and the industry conditions when you're investing in these companies. Like, for example, if we're talking about a company like, you know, like, not as necessary, yeah, so we're talking about like stay-at-home stocks, right? Like, you have to go in there understanding that the economic condition that we was in lockdown. You know, we had stimulus on the way, so you had pent up demand, pent up savings. A lot of people had so much liquidity, they was able to get out this cash. And so all these companies that were selling products and stuff like that, for people that stay at home, they were going to thrive. But you have to also understand that once the reopening came, once the panty lockdown was uplifted, you know, then what? So those are things that you have to take into consideration.
Well,
You know, like,
and then you looking at it from a standpoint of, there was an inflation bubble of, there was money flooding the market. So if we look at cost of, you know, a Peloton bike, you know what I'm saying? It's one of those things where you could have covered that with some STEMI. You know what I'm saying?
Right.
Do y'all remember the cost of the Peloton bikes?
I just looked it up. It say 1,000 to like 1,500.
Yeah, bro. So that's a STEMI package. Like, they
Yep.
literally bought themselves a gym to put it in the house. But most people don't have, like we talked about statistically, most people don't have that money saved up or put away anywhere. So they just impulse buy. So that changes the game entirely because they're not being intentional. It was just money they were slinging around. They knew a bubble, but they caught it and slung it. But the problem is they product to produce it and to house it in a warehouse. That's the thing. Like this ain't just a bunch of tablets you can leave around and put in the garage. You know what I'm saying? Or put in the basement because it's climate cooled and controlled. Like you have to find a warehouse for all these bikes. So you got to pay people to hold them. You got to pay people to ship them. And then you got, you know what I'm saying? Then you got that inflation on the other side of FedEx that they're going to charge you an arm and a leg to get it out. So then you like realizing like, was it better to just get software and put it on a cheap bike? You know what I'm saying? Make recommendations with, a better company. But them Peloton bikes was looking good, wasn't it?
It was.
So
I know somebody that went out and blew the bag on a Peloton bike and a treadmill during the pandemic. But they was already getting to the bag, so they wouldn't really relying on stimulus or nothing like that. But yeah, them bikes are expensive, and I'm glad you hit on that because I want to talk about that. So it seems that inflation and supply chain issues is tending to hit Peloton hard. It's hitting a lot of companies hard in the markets. And so kind of with that FedEx and UPS, one thing about them was that, and this is another tip too, not a financial advisor, but I would say this, when you're investing in companies, you need to be investing in companies that can pass on the cost to the consumer. You look at a company like Chipotle, you look at a UPS, more people are willing to pay extra money to ship packages. They're able to pass on those costs to the consumer, just like a FedEx would or Apple. So you want to make sure you have companies where they can do that and they can have this purchasing power, where this purchasing power can still be in the hands of the consumer, where they're willing to still buy the goods or services, no matter if the price go up or not. So that's something you want to take a look at when you're evaluating companies. But back to Peloton, so with inflation and supply chain hitting Peloton pretty hard, it says that they're looking to charge an additional $250 to set up and deliver bikes, bringing the total cost of a Peloton bike to $1,745.
Ooh.
And so I know that's a hefty price tag.
You just talk about $1,000 bike. You know what I'm saying?
Yeah.
Like,
why don't you just go buy a real bike?
You know what I'm
At that point,
go get some real views because the penny is over now. You know what I'm saying?
Yeah.
I mean, it ain't over, but you know what I'm saying? Like,
right.
people outside
no lockdowns. Now. Right.
You know what I'm saying? So yeah, that's kind of crazy.
Young investor. I want to. Can I jump in?
Go ahead.
Or did you have another point?
Oh, go ahead, man.
I wanted to talk about the question that's on the screen. You talked about it for a brief second. You said, "What's your exit plan as an investor?" And in my research of knowing when to sell, I've came up with is basically two answers out there. It's either the gains or the years that you expect to hold your investment, right? So what exactly do you, if you buy the stock, what percent do you want to gain? Do you want to double your money? So do you want to put in $1,000, the bike, the cost of a bike, and then double it? So you want to sell that at $2,000, or do you want to wait to 10x your money, right? Because earlier you said that it was the height was somewhere like around like 160, right?
Yes, yeah.
So imagine if you got in when it went down to like $17 back in March of 2020, and then you sold off close to $162, right? That's close to 10xing your money. Now imagine if you bought at the top, right? You bought at the top where it's like $162, and now it's sitting at $38.70 at this very moment, and you down 74% of your cash. So the $1,000 you put in, now you sitting on $3. I'm sorry, the $1,000 you put in, you sit on $300,
right?
Oh,
so now you got to think when should you sell? Because it's not about always the growth, but it's the risk management.
Yep.
Like, should you sell when you're, losing 10%, 20%, 30%? And like, you should think about that in your investment. Like, it's not always about, oh, I'm gonna sell when it double, or I'll sell when it 10x. But what about when it's going down? Like, do you truly understand the company enough to ride through it thick and thin?
Let's talk about it. Oh, go ahead. Go ahead, Tommy.
No, go ahead. Because it brings us to our second point of knowing that company in and out. But knowing that company in and out, the first thing is knowing yourself in and out. Like Shawn, I'm glad that you addressed that because, you know, I made this mistake when I only put a couple hundred or $100 into, you know, Sheeb or whatnot, but I didn't know anything about it. I was gambling. I was buying into the hype. You know, it didn't affect me like that. You know what I'm saying? But it's one of those things where, what about the people that did put their life savings in there? Now you gambling, you know, because Peloton their marketing was so good. I could see somebody taking their life savings, putting it in there to try to double up and not having a threshold to get down in it, right? So that makes it really tough because it sounds like you didn't know the company in and out, just like I didn't know Sheeb in and out. I ain't know nothing about crypto. I ain't know nothing about nothing. I'm just, hey, Shawn talking about Sheeb. Let me get in that, you know.
Get to the bag real quick. So you know how them people like, man, I'm tired of working for somebody. I'm about to take half of my savings and get rich off crypto. You see how that turned out for some people. But let's not get too far aside for myself. So I want to say, yeah, so back what you were saying, Shawn, when I look at companies, you know, I'm making sure I'm understanding the fundamentals of the business. I'm also paying attention to the news, such as their competitors, right? And so, you know, if I'm looking at a company, I'm going to look at the competitors. I'm going to look at what analysts are saying, how much are they going to grow, you know, and that's why I use like the different metrics, like, you know, the Warren Buffett intrinsic value methods and all that stuff to kind of figure, you know, what is a company actually worth based on these, you know, these numbers, these estimated growth rates set by analysts. And so I take that in consideration, but also news. So let me give you an example. Virgin Galactic is a space entertainment company, right? Their whole goal is to get, you know, people on a plane, not a plane, but, you know, on a ship, little spaceship, and fly them to the edge of Earth, right? You know, to give them like some type of entertainment. So this company, when I look at this company, I'm like, okay, this is actually a cool idea. You know, this was before Elon Musk and all these other guys started to develop their company to do the trip to space or whatever. So when I was looking at this company, I was looking at, okay, this is pretty cool. No competitors in the space, you know, they don't really have any revenue, but I'll take a risk on it. You know, I'm willing to ride it out. But as the news came out and as I started to look more into the financials, I started to see that the path to profitability for Virgin Galactic was going to be very hard because the tickets are so expensive. You know, you're basically targeting a minority market, which is the rich people. So it's a relatively minute. So it's not for everybody. And so, you know, and another thing that comes with that is when you're doing all this stuff, you got to make sure you have I think it's your FAA licenses, like your licenses and everything to make sure you're able to fly and stuff like that. And the company was, you know, having to cancel a lot of flights and things were getting delayed. And when I started looking at that, I'm like, okay, this is going to be a very hard road for Virgin Galactic. I don't think I want to go down this road long enough. And so taking into account the financials and the news, that's how I was able to get out. I got out at, I think it was 45. I bought in at 15. But I'm glad I did because after that, the stock tumbled. But back to what you were saying, just looking at, you know, understanding the business and seeing if they're going to be profitable or not, or looking at different news that's been reported on the stock. So I wanted to talk about another thing. When Mr. Foley said that he told employees that the company's previously announced cost-cutting revenue will likely result in job losses. That's another thing that I find very interesting with Peloton is that they've cut about 2,800 employees since this article's been published. And so that just goes to show you that there's a lot of dysfunction within management because they're firing these people, but these CEOs are still taking a lot of profits in terms of selling the stock. And I was reading something that said they were really hoping for acquisition because that CEO would win. He would win, right? Because he was taking profits. Right. It is. He was selling the stock, making money off that, and then, you know, by them getting acquired by like another company or something like that, you know, he would also win because they would say, you know, he was a hero. He was able to get out, you know, before the company really went under. And so that's definitely something to take into account. management is very important when you're looking at companies. I think Warren Buffett talks about that a lot. He says that it takes 20 years to build a reputation and 5 minutes to ruin it. So that's definitely something to consider when you're looking at companies. You got to look at management.
It's just interesting, like the gall to verbalize something like that. Like that's, what I'm saying? like I got my stock. Oh, come buy us, please, so I can get on out of here. You know what I mean? Like,
right.
That's gonna dip your stock too. Like, so we're not even just It's almost like we're looking at a three-headed monster, right? We're looking at overproduction. We're looking at bad leadership, and we're looking at like no end game, which is a recipe for disaster.
I was just thinking about the part where you said, do you know your company in and out? I'm still thinking about that. Like, you want to know what the company sells. Like, what are their products? You want to look at the financial statements and know what are their profits. You want to know their plans for the future. You want to know their acquisitions, which you're just talking about, not about just being acquired, but what companies they are acquiring. And then even knowing their competitors. Because by understanding who their competitors are, you know how the company can improve. Or if you can sell out of the company you're in because you realize, hey, the competition is actually better.
Yeah, that's true.
Yeah, that's definitely important. Like, I can provide another example. Like, we talk about Apple stock. We know Apple mostly sells hardware, right? They sell the phones and the MacBooks and the iMacs. And so I think it was the last quarter, not this quarter recently, but the quarter before, they talked about how the supply chain, caused them to miss on earnings, right? And so, if you're not really, if you're not an investor that really understands the company, you would overreact to that and sell. But if you know Apple, you would understand, okay, look, there's still pent up demand for these iPhones. They're going to bounce back in future quarters. Let's just ride it out. And maybe we add some shares on the dip. So that's where it comes into play of actually knowing the fundamentals of your company and knowing, the sector as a whole. Like, there's risk to every sector. Like, for example, hospitality, restaurants and entertainment, they were affected by the penny, right? Some companies still thrive. Like tech, they still thrive. They was able to push out products to people. People was buying products to go to school and to do work and all that other stuff. They thrived. But these other companies, like, AMC and concerts and all that, they had to shut down, and so they was hit pretty hard. So you just have to understand, the sectors that you're invested in and the risk that's associated with those sectors. That's very important.
That's real. And that's interesting that you talked about that, because when you're building a company and an organization, in the military we call it a PACE plan, right? So when it comes to profits, when it comes to losses, when it comes to taxes, all of these things we want to look, and we're kind of building out the 100 Millennial Network this way too. You want a primary. So P is primary. A is alternate plan. C is contingency plan. And E is emergency plan. And I know it sounds like these are, these are a lot of different plans, but if you have these plans, now you have go-to buttons of how to have these conversations and how to clean these things up. Because I guarantee, the companies like Nike, the companies like Apple, the companies with staying power, with Amazon, right? Their CEOs don't stay for a long time in that top level position. Eventually they have to phase out with the technology or upgrade or whatnot. You know what I'm saying? They still got hands on the brand because people want to see that. But at the same time, with Jimmy John's, like when they sold out, it was one of those things where they had a bunch of different people with a bunch of different plans of how we gonna execute next. What's our, we talked about this earlier. What's our 1-year plan? 5 years, 10 years. We talk about this with our meetings. You know what I'm saying? Of how we building out. You know what I'm saying? I try to share that vision as early as possible. But the problem is when you focus on vision over profit, you're gonna lose. Or when you focus on profit over vision, you're gonna lose. Because the problem is you can't be profitable 24/7. It's just not possible. You know what I'm saying? Especially in the beginning stages. You know what I'm saying? Like when Apple first started out, like a lot of people couldn't get iPods, but they found a way to diversify their market to sell to younger generations, so they can get that technology out there. Because I wanted an iPod for a long time, but all I could get was the MP3 player from the store with the the 5 to 10 songs. So it's something you want to look at.
I agree. Let's see, is there anything else I wanted to talk about?
I wanted to jump in real quick because, like, now that you brought up Apple, my brain, started thinking some stuff because it said, "Do you know your company's leadership or lack thereof?" So I watch a lot of EYL, right? And then Dunlap always talks about how good of a CEO Tim Cook is. So I asked myself, like, the founder of Apple, and what his vision was to be like, create those smartphones and really revolutionize the future of technology. So I was like, how was Apple stock doing from the time it was IPO to the time that Steve Jobs was no longer the CEO, right? Or the CEO. Did you know that he took that company up 17,000% of gain from when he started until he passed away? And then when Tim Cook took over in 2011, between 2011 and until now, the stock is up 11,000%. So it's like Apple did a really good job in choosing that next person to take the spot for Steve Jobs. Like, he is doing a splendid job, right? Because it could have went the whole opposite, direction if they didn't choose the right leadership.
Thanks. Well, and that's interesting. You got to build out based off of the players that you have. And I think it's interesting because, some might see, like, we all have different strengths, right? Like, and how we build out our organization recently, right? We just talked about this, before the podcast, right? I made you, head of research, right? That's your thing. Like, that's what you love to do. You got the class, you can, research articles, pull stuff up. You can even bring your class, however you want to chop it up, because I don't micromanage that piece, right? However you want to do it, that's your expertise. And somebody say they're like, okay, well, I made, the young investor in charge of operations for Bag Talk. It's one of those things where his mind goes straight to operations. Those are things that we fed off of and are like, okay, he has a mind for this. We need to bring him in. But at that time, I had no idea where we was going with it. And, they say a lot of times you got to build it as you fly it. And people don't understand that concept. That's why it's flying, not why it's hitting on the ground. You about to touch down and touch and dip. But that's what Apple did a great job. They built it while they were flying it, and they were flying it ferociously. Straight pure jet fuel, keep going. Because everybody's like, oh, well, what's going to happen to Apple? What's going to happen to Apple? Nothing, because you're talking about them right now. You know what I'm saying? But you got to make that transition swift. It's like recently, I don't know if y'all follow football, but Tom Brady, he's moving. They talk about, Tim Grover talks about in his book, Relentless and Winning. He says a true, closer, he knows when to move on and when it's time to pass over, the crown and move on and develop the inner pieces so they can be successful later. Kobe did a great job of it. He retired, he walked away, but he started a whole nother venture. And he was very, very successful in that venture, moving on, because he took the same success principles and he laid them down. It was like, hey, you take this and be successful, right? Like, I'm a critique and say, hey, I think you need to tighten up on this a little bit. But we've built such a great team and camaraderie here that we can kind of endure just about anything, including the deployment. Like, I got faith in my team. Like, you know what I'm saying? I got a really small team, but we want some really big range. You know what I'm saying? And so it's one of those things where, like, we built like that, and we're gonna continue to build like that. But we build different. But brand is everything, man. And that's why, like, I got y'all on here and not a bunch of other people. Like, y'all was actually hashed out from, Tom came from the Millennials Art Series, from EIU, from the Millionaire mod, so I already knew where his mind was cooking. And even when I was looking at the other episodes before, Shawn, you was cooking in those because your research was immaculate. We just kind of had to fine tune and squeeze it down into three things. Because otherwise, me talking and you talking, bro, we can go all night. Some of our episodes was almost looking like an hour and a half, wasn't it? So it's gonna be hard to take a seat back and watch y'all cook, one on one. But it's gonna be interesting. I'm looking forward to that.
So the last thing I wanted to add was right here, we talk about how Peloton increased production in early 2021 when it was racing to keep up with orders earlier in the pandemic as people pivoted to working from home. But as people have resumed to working out in gyms, demand for its machines has cooled. Peloton cut prices for its bike about 20% last year, but recently started charging customers for setup and delivery. So that's why I was talking about that additional $250 and that additional $350 for the treadmills. And so that's what I'm saying. As you know, as you look into these companies, like I said, you gotta make sure you're looking at, you know, these companies from a 10 to 15 year view. I know that's kind of hard for some people to do. And to be honest, this was probably a trade, to be honest. I don't know if Peloton was really a long-term investment to hold that long, you know, because, you know, really they're not really profitable either. So that's something you got to consider. And I know people invest in growth companies and stuff like that, but just following Warren Buffett principles, you want to mostly be invested in companies that's profitable. But just looking at Peloton, it's just hard to see them thriving in a type of economic environment that we're in now, when you got reopening and people are looking to get out and not be inside their homes. Do y'all have anything to add on that?
Just a real quick point based off of what you just said. Basically, know the difference between a trade and an investment. Just know if you're gonna get into, you know, a trade, again, like we said earlier, know your exit strategy, right?
Right.
Yes.
If you're gonna be an investor, like you just said, Warren Buffett does not invest in companies that do not produce cash flow, money, right? We need profits. Okay, so that should be your investment, not the negative, not the negative debt. Okay, we had a whole discussion on that. I ain't gonna get into that. Go ahead, Tommy.
Well, and it's foul because guess what? When Peloton decided they was going to add a subscription, Apple was giving out free subscriptions to Apple Fitness with their watches.
Mm-hmm.
You know what I'm saying? It shows what the great companies do. They add more value. They don't take from their people. That was probably one of the biggest red flags. Because how you gonna sell me a product and tell me it's all good? Now I gotta pay a subscription. Now, if it's Netflix and y'all continue to add value, y'all add more shows, y'all add more, you know, diverse, you know, topics and stuff like that. It sucks to pay more for Netflix, but I know that I'm gonna get more out of them, you know, if I cancel my Hulu because they trying to bring more value to the conversation, right? That's a different conversation. But if you got a product that was already expensive, now you're charging more shipping. Now you're charging a subscription. Now I got to pay for the app on top of the app. Now we got some problems.
And I'm glad you mentioned that, Tommy, because that's something that made a lot of people try to move, kind of move out of Peloton. Seeing Apple coming in, announcing the Fitness Plus and things like that, because that's Peloton is it's stiffened competition for Peloton now that Apple's getting into the fitness, you know, environment, and Apple's goal is to dominate fitness, you know, because that's more revenue on the service side. You know, that's reoccurring revenue, and so they would subscribe at some point, and that's going to become a huge challenge for Peloton because now they're going to have to deal with Apple, and
Yeah,
so
100%.
that's very important because you may see companies that you're invested in where they may start to lose market share in terms of, you know, what they're good at. You know, that may be alarming. You know, you may have to reconsider some things. Maybe should I sell now, or, you know, will they still be able to expand and keep taking over the market? Like, for example, we look at a Microsoft. Microsoft controls mostly the office space in terms of, you know, giving out 365, PowerPoint, Excel, and all that stuff. You know, they own that market. And so with Peloton, you would have to go in and look at that and say, okay, you know, stiffened competition from Apple now, you know, do I really want to hold this stock going forward long term? I don't know if they're really going to be able to compete with Apple like that. You know, so that's something you got to consider.
Yeah, 100%. I agree.
Let's see. Do y'all have anything else?
Nah, man, this was a great episode, man. You was a good lead, brother.
All All right. I think we good. Any closing words? Y'all got anything to say before we end the show?
Hey, do your research.
Know the difference between a trade and an investment.
And I just wanted to say, on this channel, like I said, we're not a financial advisor, but we just trying to give y'all, some tips and insight on what we would do and be intentional. Make sure that you doing your due diligence. Make sure you're not just looking at the bottom line in terms of revenue. Make sure you're looking at management, because the guys at the top, they represent the company. I'm Trey.
I'm Shawn.
And I'm Tommy, and this is Bag Talk 101.